What is going on, everyone? Welcome back. So in today's video, guys, what I want to talk about is 3 companies that are fundamentally overvalued, okay? So I want to preface everything we talk about in this video today by saying in no way, shape, or form am I saying these are bad stocks or, don't buy these companies or get out of them. I'm not saying any of that. All I'm saying is that these are, 3 companies that have, huge fundamental flaws, making them appear to be extremely overvalued. At the end of the day, investing all comes back to supply and demand. It's as simple as that. If people want a piece of a company, they're going to buy it, whether the fundamentals are good or not, and the stock's going to continue to go. And the exact opposite. If a company is no longer in demand, people are going to sell it, and the stock price is going to go down. Okay? So real quick, guys, this is the Worth More Investing channel. My name is Jeff. We talk mostly stock market related things. We also talk real estate, and we do financial training. So go ahead and subscribe now so you don't miss any content. All right, guys, coming in at number 1 is Ionis Pharmaceuticals, ticker symbol IONS. They trade on the NASDAQ exchange. Now let's just go on right on down here to their basics, their statistics here, and that PE ratio, 393.47. That's a monster. That is a monster. That's way too high. Like I said, fundamental investors are going to see that, and they're going to, cry. They're going to it's just going to scare them, like Halloween or something. We can take a quick look here at the earnings, and the earnings are just a mess. They're just kind of all over the place, Here in Q4 2016, they had a huge blowout quarter. Then they had a miss on lowered guidance, a miss on lowered guidance. They had a beat, and these earnings reports are not really trending in a very good direction overall. But what makes this company so overvalued, guys, is the massively high PE ratio. Let's head up here. We'll take a look at the 5-year chart. But yeah, as you can see, 5 years ago you could have got in this stock around $13. Okay, it's trading about $53 now, and the stock chart is very similar to the earnings, just kind of all over the place. Up in the down in the 20s, up in the 40s. I know a couple years ago it got up in the 70s for a while, and this stock is just all over the place, and I think a lot of that has to do with their imbalance in earnings and their extremely high PE ratio. All right, so coming in at number 2, you guessed it, Tesla Motors. Ticker symbol TSLA. They trade on the NASDAQ exchange, and this company, guys, this company doesn't even have a PE ratio. They have a negative 80, mostly because they are not profitable at all. They're not currently profitable. And, they have a negative profit operating margin. They have 28% of the shareholders short. They have all kinds of debt and very little cash, and the stock still keeps going up. Go up here. Let's take a look at the 5-year chart. Here we go. This is a 5-year chart on Tesla. This would have been one of the best investments you could have made 5 years ago. Absolutely. And this stock here, the story of this stock is, again, supply and demand. It's the storyline. Is the the great work they've done with electric cars, and a lot of people are just a believer in Elon Musk and his brilliance, and we know what he brings to the table. But again, a company that is massively overvalued, and then we can go right down here and look at earnings. The earnings are a mess. Just look at this. It's a miss, a miss. Then they beat on lowered guidance, and then a miss, and then lowered guidance. It's just this earnings chart is just pathetic. And but like I said, you go up here, the 5-year chart. 5 years ago you could have got in this company for $40 a share, and now it's $334 today. So, this is one of those things. Fundamental investors will stay away from Tesla, but this stock still continues to grow and grow and grow. All right, guys, coming in at number 3 is Netflix, ticker symbol NFLX. and they trade on the NASDAQ exchange. I actually have a small position in Netflix I picked up about 1.5 years ago. I didn't spend a whole lot of money on it, but the stock has performed well. Very, very good. And I've got the 5-year chart pulled up here. We can go down and, 5 years ago you could have got this stock for under $15 a share. And now it's well over 200. So this would have been a great investment. Heck, it's up 2% today. But still, even with this, it carries this 212 PE ratio, which just screams overvalued. Fundamental investors are going to see that and run away because the PE ratio is so high. Right here's a look at their earnings. The last 4 earnings, they've kind of been all over the place. They've been up real high and guidance has come down. They've came in line. They had a miss last quarter, and now the guidance is back up again. But again, that 212, PE ratio, that's ridiculous. And there's other companies that could have obviously made this list, but this is just 3 companies that I think are the most overvalued, in terms of the fundamentals. Okay. So guys, the reason I made this video today was just to illustrate how big of a mystery the stock market really is. Is that you can't just sit down and look at fundamentals and that tells the tale of a company or a stock. Okay. Is that, a lot of times a company can be fundamentally flawed all day long and it's just going to continue to go up. At the end of the day, it all comes back to supply and demand and how badly people want a part of this company. Not just people, but hedge funds and big banks and underwriters, if they have a long-term vision, they think, for example, with Tesla, the future of automakers is in Tesla. They're just going to keep holding that stock and buying more and more and more of it. Doesn't matter that the numbers are all screwed up. Does not matter. They want a part of the company. It's going to keep going up. Same with Netflix. Same with Ionis Pharmaceuticals. So there is not just one cut and dry way to look at a stock and tell you if it's good or bad. Okay. Looking at the fundamentals, doing lots of research is a good thing to do. You want to be very aware of the companies you're interested in, the companies you want to invest in, but it does not always tell the tale. Okay. Anyways, guys, if you enjoyed this video, hit that like button. If there's an overvalued company that you know about, that you want to talk about, leave it down in the comment section. And as always, thank you for watching.